What up, everybody? Welcome to another class full of gems here at BTSMC. You know how it go. Man, oh man. Man, oh man. I got a lot to say. I ain't gonna lie. Because we've been killing it over here at BTSMC for real. If you new here, welcome home. I'm gonna say that ahead of time. Welcome home. Um, so man, let's kind of like take it back for a second. So if you're watching this on recording right now, I want you to know what time period this is. So if you kind of look at the chart right now, let me show you NASDAQ specifically. You look at the chart right now, you can see that we were in a crazy range on the NASDAQ. This lasted the entire month of June, literally. And everybody's just been like, man, are we going down? Are we going up? All-time highs is just above, but at the same time, the momentum slowed all the way down. It looks like, we probably gonna break down and drop off. And then at that, and then what happened towards the end of this consolidation is out of nowhere, quote unquote, there was an attack with Iran and Israel, and just a whole lot of geopolitical conflict going on that made people think, oh yeah, this market is gonna drop. Side note, if you've been in my community, you know that the day before the huge drop, when they first attacked each other, I had called out that drop the day before because the chart showed it. Just so you know, the charts will always show what's gonna happen. And so I'm not trying to say war is, you know, engineered, but I'm not gonna say it's not either. I'm just not gonna speak on that topic. All I'm gonna say is the charts will always show it first. I got a brand to protect. I ain't going there with y'all. No conspiracy theories from me. I'm just saying the charts always show first. So anywho, now just to show y'all, this was the plan headed into the week. So there's a few things I said. So the thing about it, the war broke out. Man, if you guys were on social media when the war broke out, you would have thought like we was in World War III, right? You'd have thought like, oh my gosh, the world is ending. And at the same time, on Saturday, I'm telling my group, I'm like, yo, I know we have all this crazy war news, but this is like I said, this is June 22nd, 2025. I still lean towards price being bullish though, even if we have a baby pullback, because the higher time frame is telling me to stay bullish. And then I'm saying because the charts always come first, I'm letting my people know, like, yo, you're gonna get some type of bullish news very soon. Some bullish news will quote unquote shock the world. And then of course, we want to see. Remember, this is during the weekend. Price didn't open up yet, so I'm like, we'll see when we open up. But y'all know I'm bullish, so I said that Saturday night. You know what I mean? Now let's also see what was said Sunday at open. Sunday at open at 6:04 p.m. I said that's gonna be the low right there. Watch, cause I'm saying that's the low of the week. Um, that was, I know I'm on replay mode right now, so this green candle is the first candle of the week. I said that this was the low of the week right here, right in the bottom of that wick. And spoiler alert, yeah, like that ended up being a low of the week. Spoiler alert, we ended up running very hard, and we're about to run all-time highs any second now. So by the way, but anyways, okay, and then last thing that was said is Monday morning. This is Monday morning, right? So I want you guys to remember this as we go through the demonstration. So I said, just watch for the random bullish news, quote unquote random, right? I said, I anticipate a quick move. Then this is important towards the demonstration I'm going to show you on the chart because I want you to learn from these technicals. So I said, I anticipate a quick move down at 9:30 to bait options traders bearish and then a random major bullish rally. And I'm going to talk about that when we get to that part of the demonstration. But keep in mind that I said I anticipate a quick move down at 9:30 a.m. So keep that in mind, all right? And I said, if we get bullish news and we rally, just think about it. The candles is telling us what's going to happen in the real world versus people thinking the real world is going to tell us what's happening with these candles. Like, nah, it's the other way around. And I'm letting you know it's smoke and mirrors. Price action makes the news predictable to me. So because the charts told me we're going to be bullish, I already knew very soon we're going to get something like this. When y'all president, released, this message here talking about the ceasefire and this, that, and the third, and then price quote unquote ran. Everybody was so shocked, like, oh my gosh, they figured it out. Like, all right, bro. We been knew they was gonna figure it out because the charts told us they was gonna figure it out. So I was never really tripping about the war because I believe in the charts. But anyway, so let's really get back into it. And so remember this, I'm already bullish on the NASDAQ, especially since we opened up that very the first few minutes of the market, and then let's push towards like actual market open. On my phone, let me go back to the hourly right quick. Okay, on the hourly, I can see my trading view is lagging a little bit. I hope it don't give us too much trouble today. Hopefully it don't give us too much trouble today. All right, so we got this hourly bullish fair value gap. So why am I focused on this hourly bullish fair value gap? Think about it. I am bullish. Therefore, I'm focused on bullish PD arrays. And some of y'all are like, yo, what is a PD array? I know I got new people in here, new terminology. I get it. A PD array, it stands for premium discount array, which is basically areas on the chart that we may use to bounce on, or areas on the chart that we may use to reject on. So maybe some of y'all have heard of a fair value gap. A fair value gap is an example of a PD array. All right, so when I'm bullish, when my sentiment is bullish, I'm focused on bullish fair value gaps, for example. You feel what I'm saying? And I know I talk about fair value gaps so much that I'm real quick. I wish I could go in detail, but it's a time purpose. I can't go in detail about why fair value gaps make sense, but I'll just tell you what it looks like so you can follow along better for the rest of this class. You need 3 candles for it, right? Any 3 candles in a row, and you want to highlight the part of the second candle where the first wicks, where the first wicks right there and the third candle's wick do not overlap. So basically you're highlighting the imbalance. You're highlighting the part where it's just strictly buyers on a bullish fair value gap. All right, so notice the wicks don't overlap here, and there's a body that's just fully exposed. That is your fair value gap. All right, I would go into detail if I have more time so you can really understand it conceptually, but at least visually, that's what I'm highlighting right there, where the first candle's wick and the third candle wick do not overlap. So that same thing is happening right here, okay? And y'all can see that price comes into this area and we getting a little bit of a bounce. All right, so that's 7 a.m. Let's go closer to market open around 9:30, and I live traded this too. I think I gotta make this visible on both time frames. Hold on. Here we go. All right, back to the 5 ski. There you go. So we getting the bounce. This is still 7:55 though. We still sleep. Go to the 15, speed it up a little bit. All right. So we trying to get closer to market open. We getting the bounce off the fair value gap. I like that. This is very interesting to me. I'm like, okay, this makes sense. This is perfect. But then you know what I'm thinking about? I'm thinking about that message that I wrote in my group that same morning at like 7 a.m. I told them at options open at 9:30, there's going to be a quick pullback to the downside because they need to bait people bearish. So back to that mindset. Why are they baiting people bearish, y'all? Because this market is driven on taking people's stop losses. And also when you feel like it's too easy, it probably is. So right now, think about it. In the air, all anybody knows is like, yo, there's a potential war that's about to break out, World War III, take cover, bombs away. You know how that go. And everybody think everybody going to another bear market or something like that. And it's like, bruh, if everybody, when my group chat is hitting me and hitting the chat like, yo, we about to go to World War III, I'm like, all right, yeah, nah, we about to rally. I'm like, when everybody on one side, like, we about to rally. I already know. And so that's my point. So think about it. Everybody trying to go short at market open, so they need to bait people in that direction. And so boom, let's see them do that. Let's see them do that. This is a 9:30 candle that's about to pop out here. First candle, boom, red candle. Think about people's emotions. The market makers play on our emotions. They play on human psychology. That's how they make their money. So of course, with the war news coming out, everybody think about to die right now. Like, I'm talking about price action die, not human life die. Everybody think price action is about to die right now. Like, yo. So we dropping extremely hard, but then don't forget, we got this hourly bullish fair value gap that's supposed to support price for higher. Okay, so you probably saying, yo, Rell, we traded past it, so it failed. And I'm gonna let you know it did not fail. It's okay. I just want to put you on that for fair value gaps, as long as the bodies of the candle are holding the area, then the area is still being respected. We don't really care about wicks. So in this case, you'll see, and I mean hourly bodies, by the way, because it's an hourly fair value gap. But even on the 1 minute, you can see that the bodies held it. But it's real because I got it from an hourly time frame. I need hourly bodies to hold the area. But regardless, even the 1 minute held it good. The bodies are inside the purple, and we push it. So we go long during this green candle, and on the live trade, and because we were expecting price to turn around, all you see is that price basically just swept these lows right here. Swept those lows. You go long during the impulse, right? Expecting a big run to the upside. And do I think it's going to stop right there? Of course not. I'm expecting a major breakout today. Like a major breakout, because they baited the options traders short first. And then what happened at 9:35? Boom, major rally. Monday was definitely wicked, indubitably, but it was also expected. Anytime I feel like everybody's on one side, I feel extremely uncomfortable. Like, oh nah, why is everybody bearish and I'm bearish? Heck nah, I'm about to be the only bull in the room. And it's not to be a contrarian, it's just understanding that this market is not designed on, like, this market is designed to take people's stop losses, put it like that. That's it. It's a money generating machine. So if everybody's on one side, but most people lose money, that's simple math. If everybody's on one side, but most people lose money in the market, why would I stand with the sheep? I bet. So that's why I'm bullish. But it's not even really just, that's one thing. That's one reason I'm bullish. But I ain't gonna lie, like, even just from an hourly perspective, this is exactly a setup I would take after we sweep, right? Sell side liquidity like that, meaning you see this quote unquote support level. This is what most people would call a support level. There's also some lows right here that we swept, right? Yeah, if there's no continuation, I'm already looking at that as a sweep. Hence why, like, let's not get it twisted. Hence why at 6:04 p.m., and I showed y'all the proof of that, when price is right here, I said that's the low of the week. So I'm already knowing we bullish just strictly off of technicals. But of course you want to see the follow through, because I could get it wrong too. Anybody could get it wrong. So you still want to see the follow through. So when I see price, doing things like this, using the hourly bullish fair value gap, then here we are. Tiff said, Rel been getting nitty gritty in the dirt with these numbers lately. Fire sauce right here, y'all. I appreciate you. Appreciate you, Tiff. Let's get it. So we running. Things look really good, of course. There's no reason to sell your trade right now. I think everybody could just see this is an easy hold. I'm on a 1 minute time frame, y'all. Like, this is an extremely easy hold. There's nothing to sell for right now. You see these highs? Come on now. Shout out to people who've been here for a minute. I know y'all better not hesitate on nothing like this. Look, you got a high, a lower high, and another lower high. What is that? That is called engineered liquidity. I have a whole class on engineered liquidity for free here on this YouTube channel. If you're in my free Discord, go to the BT class recordings tab in my free Discord and binge watch those. But just some weeks ago, I made a class on engineered liquidity, and you see, when you have these lower highs like this is just easy target. Like, this is candy, bro. It's candy. So I'm like, okay, order flow is bullish now. I'm believing in upside. So yeah, I'm expecting price to run through all of those highs, right? All of those highs. So the yellow line is a target right now, off the rip. So here we are. Come on, trading view. And guess what? Look what's working, by the way, on the way up. It's like magic, right? Fair value gaps working. I wonder why bullish fair value gaps are working. I wonder why. Hold on. Let's really talk about it. I wonder why bearish fair value gaps is not working. Dang. I was watching this guy on YouTube, and he told me if I see a bearish fair value gap, I'm supposed to take puts. I'm supposed to take sells. For real? Maybe you lack in context. In context, this is irrelevant. We're not tripping about that at all. That's why we traded right past it. But it's okay. You got to realize that fair value gaps is gaps, y'all. Like, don't forget that third word. It's called gap, fair value gap. Gaps get filled, right? I thought gaps get filled. That's what I learned when I first became a trader. But then also, gaps get bounced on and rejected on too. How many times y'all been looking for like a gap fill on some ticker, and it'll come to the gap and reject the gap and go the other direction? Yeah, that's because gaps are imbalances. Imbalances either get bounced on, rejected on, or filled in. So how do you know which one is going to do at which given time? you need to understand context, you know? Most definitely. Hefe said, bro, it's really cool on these levels. Yeah, you got to jump on with the mentorship. I appreciate you. I definitely don't say a whole lot in here. I say a lot in here, right? Obviously, like I think people come back to these classes every week for a reason. I say a lot, but there's so much I'm not saying. Like I'm not saying 90% of what that I want to say. And I really encourage y'all to come in the mentorship because then I talk too much. In the mentorship, I talk too much. Y'all gonna get sick of me. But yeah, all right. So let's get it. Let's get it. Let's get it. We obviously trying to, run to these highs or whatever. Boom, target hit. Cool. And of course, you want to see some continuation. We get a continuation. And just think about it. Like, this is killing people. Think about options traders or even futures traders who, when they seen that drop off that morning, got extremely excited. Like, yo, I told you Trump about to send us to war. Like, bro, that stuff be noise, son. That stuff be noise. Focus on them charts. Focus on them charts. You see what's going on. You see what's going on. Focus on them charts. That's the best way to stay away from the manipulation in the media. It's a lot of manipulation. They're gonna make everybody be on one side. Man, like I ain't even plan on going here with it, but I just got to real quick, just as a reminder, because once again I know people is new here. Yo, like on December 31st, 2024, before there was ever a bear market in the first place, I told my members, when the bear market comes, it's gonna bottom out right here. Bro, price was right there, y'all, at this arrow. Yo, the freaking magnet tool be annoying me. Price is right here at this arrow right there. And I say, yo, when the bear market happens, it's gonna bottom out right in this exact spot inside of this purple area. Yo, that was the bottom. So why am I bringing that up? And matter of fact, I know some people wasn't here before. Hey, I also called at the top of the bull market, by the way, to the exact tick. I called that out on July 7th, 2024. So on July 7th, 2024, that's when prices over here somewhere, right? I said the exact high. I said this is the exact high of the bull market. And I said when it gets there, we're gonna have a bear market. And so, yes, I called the top of the bull market 7 months early. I called the bottom of the bear market 4 months early. And I say that to say, in both locations, right? When price was up here, there was no bad news out. Everything looked so good. I remember this because I was telling my bro in my group, saying, I'm like, yo, the market finna drop off, bro. I already know it's gonna happen. I've been talking about this for months. The market's gonna drop off in this area, in this exact area is gonna drop off. He like, bro, that's probably not gonna happen because like things look good, the economy's great, inflation's coming down. I'm like, yo, that's exactly when they make the move, when everybody's on one side. I'm like, but the charts is telling me it's gonna come down. And the charts is telling me it's gonna come down to right here. So look, this is what happened. So my members, people that's been in here for a minute, we made money on the way down. We took swings and everything. We was making money, praying. You know when everybody got bearish? By the way, a lot of people was buying this dip and buying this dip and buying this dip. And I'm like, yo, we not done dropping yet, but whatever. Yo, when we get to this area, around here is when people got bearish. A lot of y'all might not remember this, but I remember it because I'm obviously looking for it. Around here is where we started like really confirming, yo, there's a bear market. Because a bear market is when we come 20% off of the recent all-time highs. So when we drop 20%, we dropped 20 something percent in this specific bear market. But when we finally dropped 20%, then the headlines was hitting the media like, yo, the stock market is crashing. It's a bear market. It's like everybody kind of woke up around here and now it's national news. And then guess what my group chat is saying? Yo, Rell, how low is it going? Yo, Rell, the market crashing, right? I'm like, yo, bro, I've been short since like 2 months ago, dude. Like I've been short for forever. And y'all just not realizing the market coming down. That's because they're following the media. So what do people do? They look to short. They look to short as soon as we bottoming out. Because that's when if you following the news, you're always gonna be late to the move. You gotta follow the chart. I'm trying to tell you. You gotta follow the chart. This is exactly where I was thinking the market would bottom out at. But let me be very clear. This cluster of candles made me second guess myself. Understand? It made me second guess myself. This cluster of candles. So even though 4 months prior, I said we're gonna bottom out right here, and I'm watching the bounce on my spot. I'm like, am I really right again? Like, you telling like what? Like, you almost think like, okay, I call the exact top ticket of bull market. I'm about to call the exact bottom ticket of bear market too. And then, once again, the news was very bearish at this time. I'm like, yo, maybe I'm wrong, bro. I'm like, maybe I'm wrong. So this little consolidation had me like not taking swing calls. I kind of was chilling. I was kind of chilling, but once we, got this breakout, I'm like, okay, yeah, I was right. And then obviously we've been lit ever since to the upside. But I am kind of like, I wish I got this exact buy right here. I would have been up stupid, but whatever. That's another thing. So it says, forgive me, is the purple a higher time frame order block? This comes from me pinpointing the exact spot in the higher time frame order block that I want to bounce on. So technically it was a higher time frame order block, but this is from me pinpointing the exact spot in the OB that I wanted. So something I teach my mentees is where in the order block will the bounce come from. So you may have a huge order block, but there's only a specific spot where you're expecting that bounce. You know what I'm saying? And then this target, when I call the exact top here, this target was not based on an order block or anything when I called the top of the bull market, because yo, it's all-time highs. We never been here before in the history of human earth. So how did I know the exact spot that price will reject to start a bear market? Yeah, that's that algorithmic source that as I said, I don't say a lot. I don't say a lot in here, but I definitely share exactly how I know in the mentorship. So yeah. That's definitely mentorship stuff. Facts. Cartier, so you think they're gonna run those all-time highs and trade back into the range until markets are ready to move again? I'll get to that part on the second half of class, Cartier. I'm gonna tell you my exact thoughts. I'm gonna tell you my exact thoughts when we get to that part of class on what my expectations are going forward. But let's go through these demonstrations first. But I think that was still beneficial for people to see. And yeah, wait, did I still at 840? Oh no, we good. Okay, so things look good right now. Time is this on the candles? I see 10:05. I think we still in buys, right? We making money, whatever. Things is going good until things stop going good. So I want to go over that part, like people reversals and this, that, and the thirds. All right, so right now, right, here's my game plan. Here's my game plan. We start to find exits on these positions, right? We tend to look at seconds time frames to tell us when to get out of a trade. So it might be the 15-second, might be the 30-second at specific areas where it helps us get good exits. But now let's plan for the next trade. I want to show you the morning rally, how you could have caught the morning rally. I think you guys could see that now. So let's move on to the next part of the day. If we're going to continue to the upside, which I really want to see, something that's very important for us to hold on this 5-minute time frame is this 5-minute bullish fair value gap. And this is what I make if-then statements on. So I've been very vocal about the fact that I trade off of if-then statements. It's like, if we are bullish, then we will hold this area for higher. If we are not bullish, then we will not hold this area. And therefore, I'm targeting these lows. And that's it. Let's keep trading extremely simple. So what's important to know is which areas are relevant to the market. Feel me? Which areas is relevant. So this area is extremely relevant in context. And it's not just because it's any old fair value gap. This is a specific type of fair value gap that we will be looking at, because I don't want y'all to get it twisted. There are many times where we're gonna invalidate certain fair value gaps and still be bullish. So for example, let's say there was one right here, right? Just because we invalidated this first one doesn't mean that we bearish. We might be coming to this one if this one is, a part of our framework, like if it matches, the stuff that I teach. But I'm just trying to say this so I protect people. I don't want y'all to think just because I saw one get traded under, we automatically bearish. That's not what I'm saying. It's not what I'm saying. All right. But in this specific context, yes, if this gets traded under, bruh, I'm telling you right now, we are coming right there. Okay. So we watching this area. And I'm not even mad if a person went long on this area neither. Honestly, I'm not mad if they did. At this point, I was cash though. When we actually did come into this purple, I was cash. I didn't even try to take long, so I didn't do anything. I was chilling because I had made my money on this rally. So I was honestly chilling. Price consolidated here for a little bit. Let me go to I consolidated a little bit before it started to come down. All right, I think we We good now. 10:55. Let's go ahead. 11. So even at first, you might think, yep, beautiful, fair value gap is working out. Let's pop up and let's go to all-time highs right now. And I ain't even mad at you thinking that because it's a very nice fair value gap. It's a very nice fair value gap. It's going good so far, right? Going great so far. Dang, okay. But they on. Dang, why we coming back? Oh, this is a bad sign. Hold on. It's still life though. It's still life. Don't give up. See, a lot of y'all be giving up too early. That be the thing. Chill. Chill. Let price come to you. Oh man, hold on. I'm getting nervous. I'm getting nervous until until yeah, it's starting to come down. Yeah, I don't really believe in this no more. It's over with. Yeah, it's over with. Okay, so now we watch price lose this area, and then we start to make our way down. And I didn't really expect this because once again I was bullish on the day, but it's if then statements because I didn't really want price coming back down here. I didn't want that. That was unexpected. I thought we would hold this and go higher. I didn't take the trade, but I still thought we would hold it and go higher. But I'm gonna always trade what I see. You feel what I'm saying? Always trade what I see. So now you're gonna see for this demonstration, and just so y'all see, this is a trade I had put in the chat already. I end up My bad. I end up going short on this trade. I'm out of there. Like, man, matter of fact, I know where we going, so why would I not take the trade here? That's pre-trim, and then that is you got this one is post-trim. And this is a trade I'm about to go over right now. But you guys see why I got into these cells. I got into these cells because we lost this area. So it's just an if then statement. It's like if not this, then this. And so what I want to show you is this is why we don't stay on one time frame. We need to do multi-time frame analysis. So peep game. Y'all see this hour, my fault, this 1 minute, bullish fair value gap right here. It looks nice. I ain't gonna lie. This one pretty. I might take this one on a date. That's pretty. I ain't gonna lie. And I pay for everything. Don't even try. I probably fly that fair value gap out and all that. Like that's the one. It looked good. But the thing is, that's on the 1 minute. But the 5 minute right here, the 5 minute, what the heck is this on a 5 minute time frame? This ain't nothing. This is not nothing. Like on the 5 minute, this is just it's literally there's no PD right here. There's no fair value gap. You feel me? And you got like Cartier said, you got sell side right below it and everything. So I was like, man, if you're only staying at one time frame, you might mess around and get tricked into some plays you shouldn't be in. But because I understand this trade is framed from the 5 minute, like the 5 minute is what I frame my trade on. It said, if not this, then I know we go into these 5 minute lows. It helps me ignore, bad PD rays. So all of a sudden, this 1 minute bullish one is out of context. So let's see how price treated it when it got there. We wasn't even concerned with it. My fault, I moved too fast, but it's cool. We wasn't even concerned with it. Like price literally pretending it wasn't even there. Like we didn't even bounce at least a little bit. Like dang, made me scared of something. It just I got no heart. That fit value got no heart. Yeah. So there we go. We sweep those lows. And then now when we sweep those lows, guess what? I'm thinking the same thing. I'm like, hold on. Oh nah, ain't no way. Like there's no continuation. So this is how you get in this market. It's a lot of reversals. I did a class recently about how to snipe these reversals. You got to look at certain things. Like for me and my mentees, we know why this green candle is relevant. When we traded above this green candle, we know we're bullish. We don't need a market structure shift. We don't need any of that. Trading above this green candle, we're bullish off the rip. But if you're a person who might not know what I'm referencing right there, maybe just use fair value gaps. Like people, look, there's a fair value gap right here on the 1 minute time frame. You feel me? Price didn't use it. And we just met an objective, meaning we ran past the previous lows. And then price disrespects this fair value gap. And it's coming up, mind you, it's making bullish fair value gaps on the way up as well. So if you're new to fair value gaps are such a beneficial tool to have in your back pocket and your front pocket and your every pocket you ever had, your pocketbook. It's the best thing to have on your person because like it's not just places to take bounces and rejections on. They tell you a lot about price's intention. So there's a reason why you don't see no indicators on my screen or anything like that. You don't need volume or any of that because volume is seen through fair value gaps. A lack of fair value gaps shows that that's probably a fake direction. They're setting up for something. An abundance of fair value gaps is usually the real direction. It's showing like, yeah, price is on a mission to get somewhere. The whole point of fair value gaps is that it's an imbalance, meaning price is moving so fast in one direction that it's leaving behind an imbalance. But think about it. That means it's moving fast in a direction, meaning it's trying to get somewhere. You know what I mean? It's trying to get somewhere. In the chat, it says facts. Just using fair value gap journals from these classes has leveled up my trading tremendously. Appreciate you, Michael. You've been paying attention to detail, and that's why you've seen fruits of your labor. That's all you right there. Cartier said, you viewing that first green candle as a breaker once closing above. I wouldn't use it as a breaker personally, but you can, price did wick down into it, but I don't usually validate that as a breaker. No, my breakers need certain criteria, but you can, if you look at it like on a seconds time frame, this probably is some type of a breaker on a seconds time frame. I just personally wouldn't do that myself, right? That formation is what happened, so you can validate that. Yeah. Yes, sir. So I bet, and it's okay, people. Some of y'all, I know I'm using some vocab you might have never heard. I know I have different levels of traders in here at the same time. Take what you can, take what you can. The class is free. It's a free class. Take what you can. If you learn one thing, you got better. It was well worth your time. You ain't paying nothing for it. All right, so look, here we are. What was I saying about this? We got this on a 5-minute time frame. You realize, okay, there's no continuation to the downside. This fair value gap is the last chance for a bearish person. Think about it. Let me erase this. Think about it. If we make it past this, we're easily going to these highs. It's not even close. There's nothing to stop it. It's just a cluster of candles. There's no fair value gap to cause a rejection. There's no order block. There's none of that. So my point is, it's like for a bearish person, this is the last thing they could look at. For a bullish person, we made a bullish fair value gap right here. Right here. Okay, so what do I notice? Matter of fact, let me label it for visual aid. Hold up. We got a bullish fair value gap right there. Y'all gonna let me spell bullish wrong? That's how y'all feel. And then we got bearish fair value gap right there. All right. So you have a bearish PD array going against hey, my God, Lexi, you said eval from Friday morning past. Thank you, Rell. You're doing your thing for real, man. Keep killing it. My phase 2 mentees, we've been going over like a hack to passing evals extremely quick. Now my mentees is passing evals in 1 or 2 days max. Nobody's spending more than 2 days on an eval no more. That's never happening again. It's never happening. So we have like a hack. It's crazy. It's so fire. Everybody passing evals left and right. It's lit. It's lit. So you're doing your thing, player. All right, let's get it. So here we are. Bearish and bullish PD rays. We got a bearish fair value gap. We got a bullish fair value gap. Between two valid PD rays, that tends to cause consolidation. So let me show y'all something. Let's see price battle between these fair value gaps. This joint is like ping pong. Like, yo, who gonna win this war? So first of all, the fact that I see the formation of this bearish fair value gap and this bullish fair value gap, I already expect chop. So off the rip, I'm not really falling for these fluctuations, right? I'm not going long, going short, going back long, going back short, going back long, going back short. Like, that's how you blow accounts. You fight and chop. Instead, what I do is I focus on the higher time frame. Hear me out. I personally believe that we're gonna go higher because first of all, I told you I was bullish on the day. So higher time frame context is telling me to stay bullish today. Second of all, when price came down this hard, if it had real intentions of being bearish, there's no way in the world we would have to retrace right here to come back down. It's just very extremely unlikely. This reversal right here, when it started dropping this hard, really should have had continuation through that yellow line. It should have been continuation, not a sweep and a deep retracement to a premium like the premium is synonymous with saying a deep retracement. There's no need for a deep retracement just to have price go back to that very same spot, like to these lows. There's no need for that in context. So even like on YouTube, a lot of people talk about premium versus discount, but they're lacking the context that it's like we don't always want price to go to a premium to go short. So imagine they were listening to the guy on YouTube talking about premium, and he's saying, if you want to go short, wait for price to retrace to a premium and take sells. But he's not teaching you about context. Like in context, this is a bad fair value gap to take. Very bad fair value. So context is everything. And I know some people never heard of premium, so I'm gonna say it really quick. I'm gonna say it really quick for the people. I don't want nobody getting left behind. So if you have a price leg, right? We know price never moves in one direction the whole work and the whole day. Like it's gonna retrace. And so what we do is we measure retracements of price legs. So if you look at this big red price leg, right? We obviously drop to the downside in one straight line. And so we have to retrace. So what you can do is measure that retracement. So you can take out your Fibonacci retracement tool, start it at the top. There's nuance to where you started, but I'm not gonna get there. I'm trying to say this quickly. But let's just say you start your fib at the very top or whatever. You can measure from top to bottom and see, okay, if price retraces more than 50% of this price leg, meaning it takes back over 50% of the red price leg, you are now in a premium. So some people say, hey, if I'm gonna take shorts, if I'm gonna take puts, I want price always to come to the upper 50% of that price leg before I buy my puts to come right back down to the downside. That's what I'm saying. And what I'm trying to tell you is it's all contextual, because in this case, if I was a bearish person, I don't want price coming back to premium before I go short. If I was a bearish person, actually, I wanted the retracement to be extremely minimal right there. That's why I said when we were at the 30-second time frame, I said my mentees and I, we was long, we was bullish ever since down here. Because we already know if we were bearish, that green candle I showed you would have sent price to the downside. When that did not happen, and we trade off if-then statements, because that did not happen, I know that we are bullish. All right, so because I know we're bullish, that tells me what to focus on. I'm focused on bullish fair value gaps. I'm not focused on bearish fair value gaps. So yes, they battling with each other, but to me, I'm focused on bullish ones. And so that's why I had gone long here initially. I think I had initially got in, took profits, got back in or something like that. But I know I had gone long in this bullish fair value gap, and I was talking to one of my mentees when it happened. Shout out Ash Cash, she should be in here. We were talking about this where we were going back and forth between this bearish and bullish one, and we're like, yo, the bullish one's gonna win. So what you can do in that scenario is you wait for a price to come to the one that you believe, right? Take your buys and set a stop loss slightly below it. The worst case scenario is you lose a little bit of money, but at least I'm not getting in up here with a stop loss down there. That's crazy. Be patient. Wait for price to come to the portion where you think it's going to bounce at. Set a stop loss slightly below it. So even if you lose, your losses are small and you live with the results. So that's exactly what was done there on my first entry. But then the one I screenshotted for the chat, that's this play right here. This is 80 years. So this is where I got in initially on this trade. And then I had eventually scaled out into this. We ended up meeting the target. So I'm gonna show that portion in a second. But yeah, man, this is the initial buys that I had taken, and then we taking this trade to the upside now. So let's see what it's heading for. I'm gonna go to 1 minute for that though. But I just wanted to show you the consolidation between these two fair value gaps. The bullish one is gonna win, of course, as we thought, and then price starts to make its way to the upside, and we not really tripping on, like I said, bearish PD raise or bearish fair value gaps, because we already know based on what the higher time frame told us, we know what price is looking to do, we know where it's looking to go. All right, feel what I'm saying? Good. So price makes its way, boom, runs these highs from earlier today. Things look great, and price makes a massive move to the upside. Lots of money is made on the rally. You love it, you love it, you love it. And what did it use to get there? that fair value gap. Why do we focus on this fair value gap? Because we're framing any trade we take from a higher time frame. So don't ever think because you see me on a 15-second, or you see me on a 30-second, or you see me on a 1-minute time frame, that my trade is based on that. No, my entry might be based on that. Me holding it in certain contexts might be based on that. Me exiting might be based on that. But the reason why I'm in the trade is always based on what the higher time frame is telling me is really supposed to happen. The lower time frames support your higher time frame bias. That's all it is. Don't ever get it twisted. Don't ever get it twisted. All right, so that's that. Price rallies, this, that, and third. And then let's go to the next demonstration. So, I forgot to show one thing about that. My bad. I forgot to show one thing I wanted to show you guys that I forgot to say. Because you see I got ES on the right side. We didn't even talk about ES. So it's okay. I'll just show you guys like this without replay. Where was that play? We was looking at it down in this region. Okay, look at, I want to show y'all something about ES at this time. They go to the 5-minute. So anytime I'm trading, I always have, both tickers up, on my monitor. I'm always watching ES, which is the SP 500, while I'm watching NASDAQ. So remember when I talked about that sell-off at the beginning of the week, that was baiting option traders to the downside because they was following like the news. What do y'all notice about these two tickets? So I'm gonna circle the sell-off. You got, this is the sell-off that happened on NASDAQ, and this is the sell-off that happened on the S&P 500. Which I noticed. Somebody in the chat, anybody in the chat, what y'all notice about them two? What's different? There's a divergence. Thank you, M. It's a divergence. So NASDAQ and the SP 500 tend to move together. We like to see them move together when they do different things at key areas. Yeah, you need to pay attention. It might be signaling a reversal. And so like Michael said, NASDAQ ran the lows, the S&P 500 did not run the lows. Lower versus higher, correct. So y'all killing it in the chat, good stuff. So here we are. That's something that also was confluence for going long right there. I know my mentee Alexis, for example, he had sniped that. He was saying, yo, there's a divergence that happened at 9:30 that day on that big sell-off to start the day. NASDAQ ran the lows, but ES didn't. And then both of them made major pushes to the upside. Yeah, you better get involved. That's a key sign of reversal right there. So smart money will leave clues like that. They'll leave clues for you like that. All right. Now let's get to the next demonstration here. You gotta keep your eyes on both tickers, y'all. Both tickers. Yeah. Right here. This should be good. I bet. All right, so this is Friday now. What we just went through was like stuff that happened on Monday. Flash forward to Friday that week, which is just literally the last trading day we just had, where we right by all-time highs. So if you could even see, let's really recall what happened for a second. Remember at 6:04 p.m. right here, I said this is the low of the week inside of this wick, like literally inside of this wick. I said that's the low of the week. Yes, I'm watching the whole thing play out. Like, yeah, we sniped that. Yeah, we sniped that for real. That was indeed the low of the week. And then we made our way all the way to all-time highs. And just as a side point, let me make this clear as well. Y'all see, when you look at this just on technicals, this makes complete sense. This is a setup we take all the time. It's an AMD setup. You accumulate, they manipulate you to one side, and they distribute to the other. All right, so this is accumulation. There's an A for accumulation. This drop off, that gap down that happened that day, that's the manipulation. And then this is the distribution. They distribute to the other side. It's called the AMD setup. It's just classic technicals. But you see, everyone is so focused on news and stuff, and we just trading charts. This is what charts do. This is regular. We knew the AMD would happen. That's why I called this as the low of the week. I knew AMD would happen because that's what would happen if I have a higher time frame bias. I already know we're going to all-time highs. The higher time frame told me that already. So when I see us gap down under consolidation. I'm like, yeah, buy that. You buy that right there. Buy that. The accumulation was definitely dragged. They took all month. That was annoying. But usually after something like this, you get massive rallies like these, right? So that's the thing. They do reward you after your patience if you ain't blow 28 accounts in the process. So yeah, then we make this massive rally, all that good stuff, and then we right by these all-time highs, which is the target we really have. And so because I had that all-time high target, um, I think my trading view is lagging a little bit. I'm still trying to push through that though. And we're so close to it. I'm looking at, all right, if we're moving backwards, what are we moving backwards for? Every move has a purpose. All right, so what I'm thinking we moving backwards for is, of course, you guessed it, fair value gap. So I had highlighted this fair value gap and I said, I'm interested in this one first. I want to see this one take us to all-time highs. The second fair value gap, if this does not work, it's an if-then statement, like if not this, then we would use this one instead. This one for sure. Like one thing I knew is this one for sure. But just in case, when I'm making my morning analysis, because in the free community, I send out a morning analysis pretty much every morning. That's why if you're not in there and you watch this on YouTube, click the link in the description so you can be in the free community. These are the two things I told them. I said it's either this or it's that. So you know which two areas to watch for when you want to go long on price action. All right, so keep that in mind. We got two areas right there. And we're gonna look at how it traded. So that's 855, 9, let's get it. Okay, so boom, 930. So you're seeing like price went severely under this purple area. And that's an hourly fair value gap. So it's like, it's annoying because if you guys remember, what did I say? I said I need bodies to hold fair value gaps. I don't care about wicks. I need bodies to hold it. But intraday, right? What's tough about scenarios like these is you don't really know it's going to be a wick until the time frame interval closes. So at the time it looked like, oh, price is not going to use this, so price is probably going to end up coming down to this purple instead. Remember, it's an if-then statement. So while this green wick is forming, at the time it looked like a big red candle at the time. So I'm not mad if people would have gotten faked out to the downside, but then it ended up coming back up. So that's annoying. But I'll tell you what though, whenever price goes this far under a fair value gap, usually it's the fair value gap's not going to hold. It might hold for a little bit, but I noticed that it doesn't always hold when it goes this far under. Usually if it want to use that fair value gap, it will use it a lot cleaner than that. So keep in mind that that's extremely suspect to me. Just keep that in mind as we move forward. I'm on live. I live traded this as well. So I didn't take anything here. I actually was having technical difficulties at this moment. So I ended up sending a link. And then let's look at when I was actually trading it on live with the people. I remember this now. Okay. So by the time I get on live, it's somewhere in this cluster. I'm like, okay, one thing I noticed is, yeah, we are super consolidating right around this fair value gap. And it's like, I'm not really, Alice said this was fun to watch on Friday. It definitely was. This was like, it's a tough little area, right? Like price is kind of going crazy. And when price is trying to find this identity, it's going through identity crisis. You don't have to be a part of the process. Just stay cash, just chill. There's no direction right now. So when there's no direction like that, I start thinking, okay, where am I interested in price? For me, and let me rewind this a little bit. About right here, right? So we still in the mix. For me, I'm interested. This lag is annoying me. I ain't gonna lie to y'all. I'm interested in price breaking out above the highs, a real breakout. And I'm interested, of course, in price breaking down below these lows. And remember, these lows is already sus to me because why did price go under that fair value gap so hard? Like I know the bodies is holding it on the hourly because it's an hourly fair value gap. So we need hourly bodies to hold it. Because it's an hourly fair value gap, we need hourly bodies to hold it. One more time. Because it's an hourly fair value gap, we need hourly bodies to hold it. Okay, bet. Just making sure y'all caught that. All right, anywho, I know that the fair value gap is technically holding, but it's holding in a very suspect manner. So I'm like, yo, I don't know. Price could do anything right now. I kind of need to chill and let this consolidation get figured out. But once again, I'm gonna be interested in either of these white lines for breakouts. Now, here's a thing. On any given consolidation, what I do is I go to the higher time frame to tell me where are we actually headed to, because then it tells me how to trade the consolidation. So, for example, good people, for example, if the higher time frame told me that we're going to this green line up top, right? But then the consolidation ends up doing this, I am personally going to buy this dip, expecting price to run to the upside. And that is what I call, once again, this is what is called the A accumulation. This is the manipulation, and this is distribution, the AMD. Right? So the higher time frame tells me how to trade the consolidation. That's what I'm trying to tell y'all. Okay. But in this case, what's tough about this specific scenario here on NASDAQ on Friday was I knew we was going to all-time highs. I never doubted that for a second. It's just, for me, it's like, are we going to all-time highs based on this rectangle? Or are we going to all-time highs based on this rectangle? That was the decision for me. I went over this week on my mentees why this purple one was more likely, but it definitely could use a one on top. It could have used a one on top, so you've got to entertain it. So because of that, I have to kind of take what I see and just be willing to take a potential loss. So keep that in mind. Keep that in mind. So let's go ahead and see how we can trade out of this consolidation right here. So I want to see expansion, right? I want to see potential fair value gaps, this, that, and the third. Yes, I'm on a 15-second because I'm trying to get the first expansion. So I'm on a 15-second chart here. I see that price is starting to break to the upside. We actually get a fair value gap. Beautiful. For me, at this moment on live, I go long here. And my stop loss is close. Right? What is the reason I'm in the trade? That's what you got to ask. What is the reason you're in the trade? This is a 10-point stop. The reason I'm in the trade is because I want to see a fair value gap on the breakout. And if we do come back to that fair value gap, it needs to be respected. So my stop loss is slightly under the fair value gap because I'm giving room for wicks, basically. I'm giving room for wicks. And that's it. Low risk, extremely high reward. Like, extremely high reward. I'm risking 10 points on NASDAQ, which is literally nothing. Understand me? So you can only try. The reason why I'm even trying out this breakout is because it's like, I know this consolidation could go in either direction right now. So let's see what happens. Okay. So far, so good. Things look good. I'm like, all right, yeah, we out of here. We bounced on the fair value gap. We making a higher high. It's lit. Like, now at this point, I'm starting to look at calls. I'm gonna buy my mom's. Like, I'm like, it's lit. We out of here, y'all. This the one. There you go. I'm saying, you ever get so hype on the trade, you like, man, this is good. Like, you start thinking about the money before it even show up on the screen. Like, that's how I was feeling when this happened. I'm like, yo, we out of here, bro. I know we're gonna all-time highs now. Feel me? It's over with. I'm like, okay, wait, hold on now. Slow down. Put the gun down, Price. Put the gun down. What is you doing? I'm in the trade for the same reason though, right? As long as this fair value gap hold, I'm good. But yeah, obviously it wasn't looking too hot. Man. And so at this point, I'm like, oh shoot, we just took a little loss. I ain't tripping about 10 points, obviously. That's why how we trade is beautiful, because the losses should always be extremely small. But I'm entertaining the other side. So what I mean by it's an if-then statement for me always. So to me, it's like, all right, if not this fair value gap, then we must be bearish. But I don't marry any destination. I don't marry any analysis. I have legitimate stop losses on everything. There's logic to everything. So in this case, right, I go short real quick, switch biases. But if I switch biases, yeah, Friday morning was definitely irritating. I agree. If I switch biases, I have once again, a legitimate stop. So in real life, price should not come back to this fair value gap up here. I'm gonna be real with y'all. This fair value gap, price shouldn't come back here. Okay, that's not the one. Price should not come back there. But on some just in case type vibes, I put my stop loss right on top of it. On some just in case type vibes. So here I'm risking 11 points. So one trade I risked 10 points, and the next one on which I risked 11 points. Can we remind ourselves that this is the 15-second time frame? So when I say small losses, I really mean small losses. You know? Now I know what we bounced on here, and mentees, this is the health busy. I know I'm strictly talking about mentees right now because I know y'all don't know what I'm talking about. Why? Because this is a Bag Talk discovery. I have algorithmic discoveries that are literally from my brain. You're not gonna find on YouTube. This is the health busy, y'all. If y'all check for it, y'all know how to check for it. That's the health busy. So what I see, like, okay, dang, they got me on the health busy on that one. I wasn't thinking about that at the time. Like, all right, it's cool. But there we go. So price comes back up, and then stops me out. So I'm like, all right, hold on. I got stopped out of a valid bullish play and a valid bearish play. I'ma chill in this region. Anytime that happens, I don't need more than 2 losses to chill in any given region. Like, all right, I'm gonna chill in here. Price could maybe potentially consolidate in here. I don't even want to be a part of that. I'm gonna chill. And I'm gonna wait for a legitimate breakout. All right. Now, let me go over real quick why I went short again. The reason why I went short is because I'm not convicted on this hourly PD rate. Remember, there's a chance we could come here, So that's why I'm like, yo, and we probably are trying to get to the 4-hour fair value gap. So you know what? Let me take the short into that. So that's why this trade is kind of like, I was willing to play both sides because I wasn't so convicted on the hourly fair value gap. Because I really felt the 4-hour one was a better one anyway. But we still got to trade what we see. And no matter what, we risking 10 points each. Come on, we're risking 10 points each. And we start our plays off with light size. We always start off with light size and scale into it. So no matter what, like, I'm trying to show you this because losses are inevitable. Losses are going to happen. I lose, we all lose in trading. But if you oversize your play, or if you don't have a legitimate logic behind why you're getting in and out, you're gambling out here. And I don't just get into trades and say, all right, I'm gonna get in, y'all, and my stop loss is 40 points away. Let's just see what happens. Anybody who's teaching you like that is teaching you methods of gambling. That doesn't mean they're not good traders. I don't know, you know what I mean? Maybe they find ways to make money with it or whatever. But that's literally gambling. They don't have a legitimate way of knowing if they're right or wrong. Like I told you, it's very simple right here. Like, yo, if we are bearish, first of all, we shouldn't be back at this fair value gap. I told you that before. So when we came here again, I was like, dang, I already know I'm about to be wrong. But on some just in case vibes, my stop is based on that. Once we trade over that fair value gap, how the heck is we still bearish, bro? We not bearish. So get out of a bearish trade. Why are you hoping and holding? So that's why I don't understand people having a stop loss, 40, 50 points away just to say, all right, let's see if it gets hit. That's gambling. I ain't gonna lie. Michael said entering small and scaling in is so important. That's a fact. It really is. It really is. So with both of these trades, this trade and that trade, we had entered small. Actually, I had scaled my stop loss up to right here. Well, so like I had gone long and then I scaled my stop loss up. I remember scaling up, and then we took an extremely small loss on the first longs. The second long was like the 11-point stop though. That we took an 11-point loss there. But anyways, let's move on. So right now I'm looking for breakouts. Let's go to the 1 minute time frame for this. I don't want to trade that little internal area because it's nasty to me. I would love to see breakouts, especially above these highs right here. All right, that's good signs to me. But I would like to see fair value gaps. So if you look at the 1 minute right now, you'll see that the 1 minute is pretty choppy. There's not really any bullish fair value gaps. I don't care about that baby one right there. There's no real fair value gaps. So I'm looking for expansion. And I'm never afraid to lose a trade. Ever. So here, what you're going to see is on ES. ES is moving cleaner than NASDAQ. So look at ES, the S&P 500. Look what they did. They already made a fair value. They came back into it and they bouncing on it and making a higher high right now. That look good. That look better than NASDAQ. Real clean. Keep that in mind. So ES starts to move like pretty nicely. after this. They start doing a lot better than Nasdaq. Nasdaq was still moving like it's moody. Like it didn't want to wake up this morning. Like, what's up with you? Are you acting like that? Saying I ain't really waking up moody. You gotta cuddle Nasdaq and all that stuff. Like, hey, you're not always trying to cuddle. You know, fellas, y'all feel me, fellas. You're not always trying to cuddle. They just be doing too much sometimes. But, you know, you gotta talk nice to her and all that. But here it goes. So here we are. Here we are. So then it's consolidating, but you see ES is in a good mood. ES ES is running, you know, it's actually moving up. Nasdaq is moving to the side. Frustrating. But I'm like, yo, you know what? At this point, ES is extremely clear that we're gonna take these highs. Nasdaq is acting stubborn for what? For what? For what? For what? So I want to see Nasdaq give me a reason to get in long, because I feel like it's gonna catch up to ES, but I need a reason. Guess what reason I'm gonna use to go long when I see price like this? You guessed it. Fair value, guys. Man, ain't that the golden answer? So I love fair values. They done changed my life. That's why I talk about it so much. Part of everything we do. Changed my life. Here we go. So right now, price is chilling. I ain't see no fair value get to the upside, so I'm chilling. I'm looking for an expansion candle. Boom. I'm like, oh shoot. Something about to happen. Look at ES, by the way. That's what I'm seeing on my monitor. Diagonal right to me. I see it on my monitor. I'm like, yo, ES is wilding right now. They about to take these highs. Nasdaq all the way down here, but they both just got extremely expensive right here. A news event was coming out at 10 as well. I don't care about news, but I'm like, we're gonna get some energy in the market. So when I see this is a risky strategy I take, but it's also low risk. So let me explain. I anticipate the fair value gap. So if you remember from the beginning of class, even if you knew, it takes 3 consecutive candles to make a fair value gap. So it takes candle number 1, right? It takes a middle candle. This is the expansion candle. And then you're gonna need a third candle on top of that to make a fair value gap. And what you're doing with fair value gaps is you're highlighting the part of the second candle where the first and third candles do not overlap. So my point is, I need this third candle to open up. And when it makes a wick to the downside, this wick cannot go as low as the high of the first candle. This wick cannot go as low as the horizontal line. So whatever wick we make on this third candle needs to leave a green body in between like that. I hope y'all get what I'm saying. I know some of y'all new here. Hope y'all understand what I'm getting at. So my point is, the reason why I'm interested in this trade is because I need to see a bullish fair value gap. Therefore, if I go long right here, which we did in real life on the live, if I go long right here, my stop loss is indeed right there. Sometimes I give it a little room, put it at the very bottom, just in case. You never know. Okay, so here I have about a 12 to 13 point stop. Another extremely low risk play. But what am I targeting? I'm targeting low key. I'm targeting all-time highs, very low key. But come on, TradingView, you taking mad long today. All right, but I'm targeting something, you know, like about 40 points away. Like I said, that's minimum. I'm really looking for all-time highs all the way up here. So look what I'm risking. If I were to drag this to right here, right, the risk reward is good. If I were to drag it up here, the risk reward is phenomenal. That's not even a question. And so I'm like, oh yeah, this is about to be one of the ones. We got a good setup here. It makes sense. Let's see, you know, what transpired. Why is my stop here? Let's make it very clear. My stop is here because I need to see a fair value gap right now. And if I don't see one, meaning the next candle opens up and trades all the way right there, my trade idea is dead. So why the beep am I still in the trade? Stop hoping and holding and get into trades with sound logic and trade based on that logic. My logic is because I believe we're about to see a fair value gap and I need one. If I don't see a fair value gap, I don't want to trade anymore. So I'm going to get out with a small loss. All right, let's get it. Boom. Here we are. Next candle opens up, pops up. So what we got? This lag is annoying. What we got, man? What we got? Fair value gap. There you go, M. Tiff, see it. Let's get it. We got a fair value. And guess what? My stop loss is gonna stay the same because now I need this fair value up to work. It's a reason I wanted it to form because now it's also a line of defense. If we trade backwards, of course I want this to work. Duh. That's the point of making it. So that if we do trade backwards, I'm gonna have it work for us. All right. It's just that I found a way to get in a little early. And the reason being, instead of waiting for it, because if I waited for it, let's be clear, if I waited for it, my entry would have to be right here. But I got an early entry. And some of y'all are like, but Rell, why don't you just wait for price to tap into it for you to actually take your buys or to take your calls? And my reason for that is oftentimes in specific scenarios, just like this one, we never come back to this purple area, bruh. This fair value gap never gets visited again. It never gets visited. So that's why I came up with this entry strategy for specific scenarios where I'm anticipating the fair value gap because I don't want price coming back there. I would actually prefer that we don't trade backwards after this. All right. And so I'm getting in and my risk is low anyways. Understand? So yeah. Mr. Vincent said they don't call him Nostradamus Rell for nothing. Indubitably. So you see what's going on, y'all. Imagine I waited on price to come back to the purple, like they told you to do on YouTube. I ain't getting no entry, but I'm already up 20-something points. Some people cool with 20-something points. Take that and go about your day. But let's see how this trade, continues to go. And of course, ES is taking these highs at this point, and we just looking for NASDAQ to follow suit. All right, so price pushing. We took the high. So first of all, first target hit, and then I think we got stopped out on that candle right there. I think this candle is exactly what we got stopped out. Don't quote me though. I really feel like that's what we got stopped out. We took profits, and that was a lot of chase. So it's all right, cool. We made good bread or whatever that we had to do, and then I'm gonna show y'all something. This part I don't need replay for. Thank God, because TradingView is killing me with this lag right now, bro. Let's do this. All right, so where was that trade? That's one. Right. Okay. So there's a fair value right here. This is also in the 15-minute. This I was strictly talking about phase 2 mentees. My phase 2 mentees, we took loans here. Some people were able to pass some accounts here and everything. They did what they can on these loans, but then price starts to trade to the downside. Did I expect that part? No. So obviously things are going well so far. I did expect this bounce. I called for this bounce. That's good. I thought we would have continuation of all-time highs. So let me show y'all a loss right quick. A loss that I did take. Show y'all a loss I took right quick. So you see how we bounced on this area, which is exactly where I wanted to bounce. I literally told them the lower half of this and everything. This makes sense. Lower half, boom, pop out, valid. But we also made another fair value gap right here on a 5-minute, right here. Yo, come on, man. This 5-minute right here, this is a beautiful freaking setup for all-time highs. Y'all don't even understand how pretty this setup is. Mind you, ES already took these highs. ES is up here. Don't believe me, just watch. Got you, look. Got you, look. If the lag could stop, if the lag could hurry up, I'll show you. Look. Hold on. Let's get this to the 5 ski. Let's get this to the 5 ski. I'm gonna show you ES at that time, bro. At the time, yep. So look, this is what ES looked like at the time. See how it's just a straight price lag, and NASDAQ is kind of like stalling. So what do I notice here again? There is a SMT divergence. NASDAQ did not take these highs. Let me highlight it so you're clear. NASDAQ did not take those highs, but ES then took those highs, right? The yellow lines represent the highs. The yellow lines represent the highs I'm talking about. So NASDAQ is struggling to take that. ES then got out of there. That's suspect. Now, do I immediately go short because I noticed a divergence? No. I actually don't think the divergence is going to hold. Personally, I told you I took a loss in this. I thought we were going to hold this fair value gap and take out all-time highs after that. I swore that setup was going to go well. I thought that setup was going to hit. Man, we don't need ES no more. Let me keep it on NASDAQ. That's all I wanted to show you. There was a divergence. After that said it was gonna hit, right? But no, it did not. But it's an if then statement at all times. So what do you notice? Inversion. Boom. Price takes all the way down, and what do? We go to my 4-hour fair value gap. So as we drop in, and you got money being made on the downside and stuff like that, I'm keeping things in focus. Think about how scary this could be for people. Think about how scary this could be for people watching price melt. Took back the whole day's gains. Everything looks so extremely bearish at this moment. But then at the same time, we keeping context in mind. Like, all right, I know we dropping, but y'all see what I said at 2:33 p.m. I sent this to the chat. Currently, what I'm watching on NQ. Look at that arrow, right? I draw my arrows extremely strategically. I don't just place them. I place them in a specific spot. Just like when I drew the arrow on New Year's Eve, telling y'all the exact bottom of the bear market, and it went to that exact spot on the arrow that I drew 4 months ago. That's exactly what happened here. So this is the after picture on Friday. Look at my arrow right there and look at where price went when it dropped. The exact spot that I placed my arrow. I ain't move it. The picture's right next to it. You can see I did not move it. That's the same spot. I don't touch my arrow. So when I say like this market is rigged and it's really coding, it's all coding to the exact tick and went to that spot. And then so I put this in the Discord. So a lot of people made money on this upside move or whatever. I took swing calls right here when we got into here. This is why I swung some QQQ and I went to the other side. So even as far as like QQQ and NASDAQ, remember that the NQ on the futures is the exact QQQ on the option side. So you could always trade both. Like I took swings because I really wanted to see price take all-time highs, you know what I mean? But the market was about to close. This happened at like 3 something. Yeah, this happened at 3 o'clock p.m. They had an hour left. I'm like, yo, what's up? I want to make money on this. So as I swung. But things went well. Hey, Michael said it's like watching a movie, but you already read the script. Definitely feels like we cracked the code. I ain't gonna lie. But I can't say that too loud because they're gonna come for me. They're gonna come for me, man. They're gonna come. At least my mouth is open and all for surely. It's even though like I expect these things to happen, there's a reason I'm putting the analysis out before it actually happens. It's still amazing to see it happen. It's like even in sports when I used to play basketball, like you get hot in a game, you feel me? You hit like 3 threes in a row. That feeling never gets old. And that's how I feel when I watch like Price do what I say to the take. Like it's like, yo, this stuff is fire. Even though I've seen it 100,000 times now, it's never not fire. It feels like the first time every time. It's like, yo, this thing fire. Like, cause you feel like you just know, like they can't shake you. Like, oh, y'all thought y'all sold me. Like you thought you really tricked me to be embarrassed right here. Like y'all stupid, y'all crazy. No, I knew what's up. We gonna bounce right in that same spot, and we going. You feel me? Like you just calling out the market left and right on every time frame, every ticker. It never gets old, ever. And so that's what transpired there, and we popped out. And let's never forget, y'all, this was the plan of the morning too. Remember, we had 2 plans. We had either this fair value gap for higher, which worked, y'all. Don't get it wrong. It did work out. That plan worked, but this fair value gap was also the plan as well. I guess they both worked at the same time. They both worked at the same time. Money could have been made on either bounce. We made money on both bounces, matter of fact. So yeah, Mike said the precision really is unmatched. Yeah, appreciate you for surely. So I hope you guys got a lot out of the demonstration side. There's more to do in class. We ain't done yet. But that's demonstration I wanted to show y'all. So never forget though, having a plan from a higher time frame, which is a big takeaway from this class today, is like frame everything you do from a higher time frame. So you won't get caught up. You watching this downtrend happen is very scary at the time. You watching the 15-minute chart make bearish fair value gaps and everything, right? Look at this 15-minute bearish fair value gap right here. Price not even concerned with it. We breezed past that. We not even tripping about that. Look where we at, y'all. We made a higher high. This is a successful play. We took a 4-hour fair value gap to a 4-hour high. We just trying to see all-time highs. Yeah, I'm sure that'll happen tonight. But I'm just saying, like, we not even tripping about this. Why? Because we keeping context in mind, which is what's lacking in this industry. A lot of people will have you short in this fair value gap. They probably might even have you short in this fair value gap. Why? Because it exists in premium. I'm gonna say this one last thing on this demonstration, then I'll move on. So this is why I don't like market structure. Because for people who trade market structure, one, it's a very slow strategy. Two, it's also not accurate because um it doesn't incorporate the real reasons why the market moves. The market doesn't strictly move for highs and lows. That's all I'm gonna say to that. There's more to it. Like there's more reasons behind every movement of price. So for you to have a strategy strictly based on highs and lows is you're lacking like half of the context of the market's objectives. So um so here you get a change of character to the downside. We in the uptrend, right? Boom. So if we come under this low, we're bearish. And so people are going to tell you, hey, we closed under this white line, so we're bearish. People, there's a change of character. So if there's a change of character, what's the expectation? They are telling you that you're going to have to make a lower high and then a lower low. So that's why I say there's people that's going to tell you, since it's a change of character, take out your Fibonacci tool, take it from the high to the low, and they're gonna say, hey, in OTE or hey, in premium here, there's a fair value gap. I want you to I want you to short this fair value gap. This is what the guy on YouTube is telling you to do. Because he said there's a change of character, wait till price goes to premium, take puts right here, and then take it to the downside for a lower low. That's what they're telling you. And this is what I mean by not understanding context. Because you're staring at the 15-minute and thinking you're not understanding everything from a top down. And so you're staring at the wrong PD raise. So while he's telling you or she's telling you, short this bearish fair value gap, short this bearish fair value gap, I'm telling you go long on this bullish fair value gap because I understand from a higher time frame what the real objective is. I mean, so the market structure stuff is just like now we changed character twice, and you're like, oh my gosh, my trade is messed up. We changed character twice. Like, all right, bro. Change of character is just that just ain't it, bro. I'm sorry, respectfully. There's just quicker ways, and then mind you, like we going long right here. We didn't need to see price take the previous highs to know we bullish again. Like yo, if you trade strictly market structure, you dead gotta see price take these highs to know you bullish again. Like that's crazy. You just now realize we bullish. Like, bro, we went long literally right here, literally at the bottom. We went long, bro. Come on. Like, come on. There's more to it. There's more to it. All right, so boom, let's move on. Enough for trading views lag. I'm sick of trading view right now. All right, so here we are, man. Chart debate, chart debate. What we doing? What we doing? What we doing? Chart debate. Let's see. Let's see what it's looking like. So every week in the free community, and once again, if you're watching this on YouTube, the free community link is in the description. We put out a chart debate. I give the same picture to my free people as I do to my mentees. So the free people who never learned from me, this is what, I'm gonna tell you what they got, but this is the picture. So is price going to line 1 first or is it going to line 2? We about to find out. We about to find out. We're gonna see, Mr. Vincent. So 37 people say we're going to line 1, 29 say we're going to line 2. I would say it's almost an even split. Like, yo, the free people really was having trouble with this one because y'all can't agree. So I know I picked a good chart debate when I split the group up like that. So I feel good about that. I'm evil like that. But let's see what the mentees is talking about over here. Mentees, don't embarrass me, y'all. Don't embarrass me. All right. We got Kobe numbers here. God bless the dead. Rest in peace, Mamba. We got 8 and 24. So I got 8 mentees saying we going to line 2 first. And I got 24 saying we're going to line 1. So, that is 24 out of 32 people who voted is saying line 1. So I would say we're definitely, heavy on line 1 this week in the mentorship group. Don't assume the mentees is right. They could definitely be wrong. Mentees could be wrong. I know it don't happen often, but they could be wrong too. Let's see if they're wrong this week. But first, I had to have a commercial break. So today I'm drinking simply lemonade. It's strawberry lemonade. And what I want to say about that is like, it's always good to have a delight in life. Like we're going through a lot of things. We're stressed. Your job is stressing you, your kids, your man, your woman. It's a lot going on. But it's always good to fall back on something that's like a stress reliever. Even if it's something as simple as drinking simply lemonade. And for me, I feel like it's always best to keep it simple. Bag talk. That's spiked. No, it's not spiked. It's real, just lemonade. Bro. Do I play in these commercials? Like, do I rehearse them? No. If you can't tell it's improv, I just whatever cut in my head, I just be saying it. After dog study session. Yeah, y'all crazy. Y'all crazy to check. All right, now I'm gonna stop stalling. My fault, my fault. Let me go ahead and reveal the answer to the chalk debate, man. Mentees, please don't embarrass me. Oh my gosh. Here we go. Don't embarrass me, y'all, because y'all don't even want to come to class if y'all got this wrong. Word to everything, man. Line one ski, y'all did y'all thing. Good stuff. Good stuff. Line one was the answer. It was line one was the answer. Mentee, y'all did y'all thing on this. Signatures, man. Signatures. It's all about what should happen. What are our continuation signatures in specific scenarios? So something I teach is scenarios. When you have a certain type of target, you expect a certain type of delivery. So when you're not seeing a certain type of delivery, guess what? Your target is not going to get hit. Get out your trade. It's going the other direction. That's all I can say to that. But I'll elaborate tomorrow in class. Yeah, I will elaborate tomorrow in class. The study session definitely. My mentees had a study session last night. They made me proud. I know they was talking about the chart debate and they're like, yo, I feel like it's this because this. So that's what's up. They had good discourse in there. But I don't never reveal the answer until right now. So shout out to mentee. I did your thing. I was hearing some good stuff. I was just hearing them out. Like I ain't see. So that's what's up. I did your thing. but more people. I know it was kind of close, but technically line one won in the free community as well. So shout out free community. I know it was close, but we still have more people on line one than line two. So definitely y'all doing your thing. Like I feel like both groups has been learning. Y'all been learning pretty well from the free classes. And obviously my mentees get my real knowledge. So they better be getting these right. All right. So my next mentee class is opening up September. The registration is already out really quickly while we here, and I'm gonna move on to the very last part of class. If you look in the Discord, on the free Discord, if you guys go to the important links channel, see important links, it says right there. Go here, you'll see all the links regarding well, it's live trading here, but also like mentorship links as far as payment, the flyer. You can see what it entails right there. I got free one-on-one links in here. If you want to get one-on-ones, go into this channel. You want to actually use buy now, pay later for the mentorship. There's a link for that. You want to pay in full for the mentorship. There's a link for that. Explore this channel, and if you want to know more about it, like yo, what is it like to be a mentee? Here's where you go. The channel right below it, BTSMC mentorship info. I share a whole walkthrough. I'm gonna tell you the exact mentorship experience in this video, and then under that, I also have anonymous testimonials. Every semester, I make my anonymous testimonials public because I know I do right by my people, and I know I'm teaching them in ways that's been changing their lives. So I'm like, yo, y'all don't have to sugarcoat. I know you're gonna knock on wood, right? I would assume they're gonna say good things because I'm really only doing good things by people. And so I make that public, and I make so you can read that stuff here. You can see some of the stuff that's been said. So I definitely didn't plan on clicking on this or anything like that. But even just you can see rate my teaching ability on a scale of 1 to 5. All of them said 5 last semester. Would you ever go back to your previous strategy after learning from me? All of them said they would never go back to what they learned from before. Did this mentorship serve you better than YouTube and other mentorships? All of them say yes. Compare this mentorship to the other mentorship programs in the past. All of them say yes. The only people that didn't have never taken a mentorship before. So it's not that they said something's better. They just never took a mentorship before. And then is it worth the price? 100% of them say yes. Not 99, not 95, not 90, 100% say yes. And then, of course, you could always, they all believe the market is rigged besides one person. 15 out of 16 believe the market is rigged after this. This is just what's your favorite part of the program. So that's just opinion based. And then, which is good. I like to see variety here because that means like different people are getting value from different things. Like they have different favorites. Some people like the quizzes the best. Some people like the live trading the best. Some people like the presentations the best, stuff like that. And then just read this when you get a chance, like see what people are saying. Like I want y'all to really take time and read what people are saying. They wrote these letters for you and it's anonymous. So if they wanted to, you know what I mean? Like if they wanted to say something bad, it will be right here. I would not know who wrote it. So get in, just check it out, see what people are saying. They write in paragraphs for a reason. They want y'all to read it. So check that out when y'all get a chance. I know there's a lot in the chat. For time purposes, I'm gonna read that after. I know I missed some stuff in the chat, but for time purposes, I'm gonna read that after. So let's do this last part of class so I can at least cut the recording part. Right now we're gonna talk about predictions, like what is coming next in this market for real. What is coming next? So one thing I'm a little nervous about, I can't front. My laptop's a little hot. I already see the lag. So sometimes when I click on this tab, it makes it even worse. So just let's see how this go. Let's see how this go. See how this go. All right. So economic calendar, laptop finna blow for real. Economic calendar right here. It's a holiday week, y'all. You know, Independence Day is next Friday. So usually we have NFP, which is the employment data. Usually we had that come out on the first Friday of every month, but because this Friday is July 4th, they're gonna do it on Thursday instead. So Thursday is the main event this week, but it's also the day before holidays. So just be careful. Just be careful because day before holiday is usually not really that great to trade, but it's also the most important day of the month. So maybe we're gonna see. We're gonna see what they got for us. Monday is PMI. I think Monday would be a solid day to trade. Usually the first Monday of every month is solid to trade. But other than that, yeah. Meaning Monday of the first week is what I meant to say, because technically, I don't know, Monday is still June. But y'all catch my drift. All right. Yeah. We'll see. We'll see. So Thursday's the main event. So let that guide your trades. Now moving on. Let's go back to the chart, straight back to the technicals with it. Monday is quarter end. Thank you for that as well. Yep. So Monday the quarter ends and we start a new quarter on Tuesday. Appreciate you. All right, I gotta cater to every trader. So I will get back to futures. I'm gonna go to the Forex side right quick. Forex people, man. Forex people. Have we or have we not been sniping up and down on this thing, bro? We've been sniping up and down. We've been calling the top, the bottom, all that. I give every market a little segment. I'm gonna do a quick Forex segment, like 5 minutes long. We're gonna go to the other markets. So on Forex, we've been short on Forex since literally up here, and we call price to these lows. And ever since we got to these lows, we've been consolidating. But I said as long as weekly bodies can hold this blue area, I'm still bearish on Forex. Weekly bodies. So I'm gonna show you. You see how the daily closed above it, but don't ever get it twisted. The weekly bodies held it, and so that's what I mean with fair value gaps. Like it's the time frame you get it from. The weekly bodies held that area, so we remain bearish. Even if the daily would have faked you out for a second, the weekly held. So boom, hey, we always still dropping. I have a minor target at 95.165 on DXY, but I ain't gonna front y'all. I'm on a monthly with it right now. Since price was up here, I told y'all that we're looking at a potential AMD setup on DXY, and there's a chance DXY could come all the way down to these lows, all the way down here. This thing could stop freaking lagging, bro. Hold on. I drew something. I feel like it's supposed to show up by now. There we go. All right. Oh yeah. So you see these lows down here, basically. I'm looking at it on my phone. There's definitely a lag right there. Yeah, them lows down there, people, is where I think DXY is gonna go. So just keep that in mind. I'm very bearish on this ticker, and so all the dollar pairs, I remain bullish on them. How can I get through the rest of this watch list with a lagging trading view? We're gonna do our best, y'all. On the daily chart on DXY, look, there is a SIBI, meaning a bearish fair value gap right here. I would love to see this hold if we're gonna remain bearish on this ticker. So if we do trade to the upside, I do expect it to reject this daily bearish fair value gap. Looks like I would have to adjust how I drew it, but there is a daily bearish fair value gap right there. We wanna protect that. Yeah, it's also a volume imbalance, all of that. Just this little area. So watch this general area right here for rejections if we do trade into it, but ultimately I'm bearish. That's one target right there. Let's go to Euro. Euro, I'm expecting higher prices. I've been vocal about this one as well. Being that they're inverse of each other, I've been saying, the same thing on Euro, just opposite. That makes sense. Meaning, like, if I was extremely bearish on DXY from the top, I've been extremely bullish on the Euro from this bottom right here. So since this bottom, we've been bullish on this ticker, looking for it to come all the way to 1.23496. It's right here. The lag is a little bit annoying today. I can't front, so I don't really want to do too much, maneuvering on here. But one thing I will say is there's a daily bullish fair value. It's like two of them in a row, a small one right there and a small one right there. I just highlighted both of them at the same time because overall, this entire imbalance I think will hold. If we trade backwards, this should catch price and send us right back to the upside. So I think there's opportunities right here. Emergency PD array is the fair value gap below my dotted line right there. That's an emergency PD rate. But if we get a chance for price to pull back in the here, I like going long here, and I literally feel like it's gonna, yeah, this thing probably just gonna keep running. I'm really bullish on this right now. And then same thing with British pound as well. They got the same setup. We talked about British pound holding both of these. Matter of fact, let's really zoom out. Everything that you see me have that's drawn here is something that I've called out before it gets there, not after, before. So this lag is low-key annoying me, bro. So y'all see this circle? That's the first bounce. That's the lowest body on the weekly. We talked about bounces in here too, but whatever. This bounce, this bounce, this bounce, everything good. So the next spot I'm looking at right now, I want to see this daily busy work as well. I think, like I said, there's two of them in a row on this. If we tap in here, I think it'll send price to the upside. Emergency bullish PD array, because I remain bullish. So I'm looking for bullish fair value gaps, is the one below it, of course. I would have to entertain that, and this could happen. Like, this could definitely happen. I would probably go for the lower half of this. If we come to this one, it'll probably be the lower half. But I do feel like it's gonna be the one on top. I ain't gonna lie. And regardless, I'm looking to take it to 1.43770. All right, so yeah, we're gonna see how that go. Things going well on British pound. Come on, man. Come on. How do I finish this class without getting too flustered by the lag? Golly. New Zealand dollar. We're looking for this to push as well to the upside. This monthly SIBI that we're currently in, once again, I don't want to change time frames too much because of the lag right now, but there's a monthly bearish fair value gap we're in. There's a chance it could send price to the downside. But I told y'all recently, like, I know the movement here is really tough, but I don't think it's gonna go bearish just because I'm so bearish on the dollar, and this is the inverse of it. So if I'm so bearish on the dollar, I think we're gonna push above and make it to let's just say these highs right here, right? I would look at these highs up top. So if we do make it through here, I think it's a clear shot to go there, but you could wait to see it clear the area. I think what happened last week is telling to me. I feel like if we was really bearish, we would have continued dropping. Why do we turn back around in the middle of this consolidation? I feel like it's gonna break out, but we'll see. Almost done with Forex. USD CAD should be next whenever it load. While it's loading, I would say I trade futures mainly. That's what I day trade. I swing trade options, and I also swing trade Forex. I think it's good to diversify your vehicles of making money, because sometimes futures could be choppy, but Forex is making a move, for example. Or also it's like passive income. Like I'm long on Euro right now. Like I've been long on Euro for a while, and it's just praying because, as you guys know, I've been bullish on it for a while. So it's like passive income to me. It's just making money. I don't have to day trade it or watch it, and there's no Greeks in Forex. Like, it's not like options where you got to worry about data, this, that, and third. There's no Greeks on Forex. So I could just swing trade it and have a stop loss that I'm cool with. And I could always move my stop up as the trade goes well and all of that. So just something to keep in mind, like, diversify your ways of making money. USD CAD, I talked to you guys about price rejecting this SIBI to go lower. So far, so good. We'll see if it has continuation. I think it's gonna keep dropping. As you guys know, I'm bearish on the dollar. So USD CAD, I'll be bearish on that. I'm looking for price to come to these lows right here, and probably even 1.31892. But let's take it one step at a time. But y'all see the setup, right? Y'all see the setup. So we're gonna see if we can keep dropping. It might be best to wait for a breakout under these lows to the lows below it. All right, and I think last but not least on Forex, USD CHF. I told you guys we're gonna reject this SIBI. You can see to be rejected that SIBI. A target we had on the downside is 0.78581. All right, so I'm still looking for that. I think that should get hit this week, especially with NFP. You know, NFP tends to bring energy to Forex, for dollar pairs, of course. And so we'll see how that go. So that's Forex for you. Let's move on to futures. Move on to futures. So back to my guy Nasdaq, man. Let's just see what it's looking like. Come on, man. Come on. Let's see what it's looking like. Here we are. All-time highs are in sight. They'll probably happen any second now, like I said. Oh, thank you. No, Raya, I'm glad you said that. I always do Bitcoin before I go to NASDAQ. Thank you. Bitcoin. Then we go right back to NASDAQ. Bitcoin. Yeah, so you guys may remember, these three circles is all things we said before it got there. We talked about the bounce right here. We talked about the rejection at this city. And we talked about price using this purple area to run the highs again. So yes, it's consolidating, but you know, we're controlled in the consolidation. Price is doing what it's supposed to. Just understand the areas it should not invalidate. Like, I did not think Bitcoin would invalidate this purple area. I had an emergency area under it down in here, but like I told y'all last week, I think we're gonna hold this area to go higher. And look how we used it beautifully, right? Use it real nice. You see, I had an alert below it because it was going to tell me like, wow, it's really losing the area, but no, it never lost that area. And so I am looking for price to take these highs and continue to the upside. I am interested in Bitcoin seeing 126,817. That's the first target. We'll see if we get to the 144,278, but I am interested in Bitcoin at 126,800. So we'll see. Bitcoin needs to take these highs, and I need to see fair value gaps in the mix, and then I would further validate that. So yeah, Bitcoin doing what it's supposed to. Everything look good, and yeah, we'll see where it go. I'll give you updates if something crazy happens. That's why you need to be in the free community. So if you're watching this on YouTube, definitely sign up for the free community. All right, it's not even a sign up either. Just click it, press accept. It is easy. All right, yeah. So back to that, y'all. All-time highs is en route. We about to be there any second. Yeah, I know we called this bounce on Friday to the tick leaf. And basically, all right, nothing is like, I want to see the candle so I could elaborate more on it. Basically, when we take these highs, we want to see if we're making 15-minute bullish fair value gaps on top of these highs. The 15-minute bullish fair value gaps around these highs should be respected to show its continuation. And then at that point, I would play, because it's all-time highs, right? So I'm giving you the all-time high plan that I would typically use in this scenario. We're at the highs, so I have a framework called the BT4 framework, which obviously is mentorship material. That's also my own algorithmic discoveries. That's from my brain only, but I have a framework for like retracements, basically. So mentees listening to this, I would use BT4 on any retracement you see. For people that's not mentees, I would basically look at PD arrays that are bullish, and I would only take them with confirmation. So like, let's say I seen a 15-minute bullish fair value gap, right? And we trade down into it. I want to see the 1 minute show me signs that it's working. So on the 1 minute time frame after we touch the 15, I'm gonna look to see the 1 minute make bullish fair value gaps on the way up, and I'm gonna get into my trade based on those 1 minute bullish fair value gaps, and I'm gonna be targeting 15-minute highs. So that's how I tend to trade all-time high. You have to be a little more conservative, of course, and also there's also, of course, room for you to just get in and base it on the entire fair value gap. Forget waiting for the 1 minute confirmation. That's up to you, but that's a safer way to do it. But that's what you gotta do, play previous levels and all that stuff. Now, that's how you play the highs. Let's give a bearish plan right quick. A bearish plan. Let's say they sweep and they start coming down hard. I think if we come back under this 4-hour bullish fair value gap, it's gonna melt down into this daily fair value gap below. It's a daily one below. All right. So if we lose the 4 hours, it's gonna come down to this. And this area is extremely important right here. Extremely, extremely, extremely important. The upper half of this daily fair value. If we lose this, NASDAQ gonna have a much deeper drop. Probabilities wise, probabilities say we'll have a deeper drop, probably to run these lows minimum. these lows right here. Do I see all of that happening? No, I think we're gonna maintain upside. Personally, I am very bullish right now, and but just for the heck of it, I got to give you a bearish plan because I only meet with y'all on Sundays in the free community. So here is the SB 500, S&P. They got the same setup. I ain't gonna lie, just for the lag purpose, I don't really feel like doing too much on here. So it's literally the same setup on ES. They have the same PD raise, same location, all of that. I do think they're both gonna run all-time highs, all of that good stuff. So if they lose this, I would look at this daily BISI on ES. Remember, a BISI is a bullish fair value gap. So I would look at this daily bullish fair value gap right there. And let's move on. We almost done. I can't wait because I ain't gonna front that with y'all. When trading be lacking, it puts me in a bad mood. You give me the bad mood, bro. So I'll try to finish this real quick. We almost done though. So YM looks so good, y'all. Like YM looks so good. So y'all may remember when price is down here, we talked about before price got down here, we talked about price using this monthly. A monthly BISI to go higher, and that was indeed the bottom of the bear market on the Dow. That was the bottom right there. Look how we used it perfectly to the exact tick. We used that thing, and we've been running ever since. Now we breaking out of the consolidation, bro. I almost want to full put my life savings into this to all-time highs, but I don't like talking like that too much on recording, because people like take what I say serious. Sometimes they ain't gonna really do something like that. I'm just telling you that always size your plays, according to risk. Please don't do nothing crazy. But I do like this setup for higher prices. I really do. I wouldn't want to see this fair value gap get traded under though. So we made a bullish fair value gap right here. Price does not have to use it. We actually could take off and leave it behind. But for emergency purposes, I would want to see price respect this as we remain bullish. I don't really want price coming back into this area. The last, when I say last, the very last bull case I have on this is the fair value gaps on the inside of the consolidation. Do I think price will go there? No. I don't think it's gonna go there. But that's the only thing I'm gonna check. If it loses this area, there's gonna be a big drop off. A big drop off. So, but once again, I don't think that's gonna happen. I'm very bullish on this ticker, and I think we're gonna maintain upside, and we'll take all-time highs on the Dow. All right, looks very good. Looks very good. I like this setup a lot. I'm actually interested in taking swings on that. If I see an entry I like, I could say the same thing for the Russell. The Russell looks great. So far, I've had B adjust on everything. I think the Russell. Yeah, I have B adjust on the Russell as well. B adjust on TradingView is at the bottom right of your screen. When you turn it on and off, it changes the chart. I'm gonna show you real quick. It's on right now. I'm gonna show you when I take it off. See how I changed the chart? We didn't sweep those lows no more. So it could like low-key alter your analysis. So that's why I have to be specific. When I'm charting the Russell, I have it on. Because for me, it did sweep the lows. So Pete, see, we did sweep those lows. We went under the previous lows. And now we pushing up like this. I told y'all this in the past. I said, I do believe we're bullish already, but I need to see us lose this fair value gap just for the last form of confirmation. We finally lost that fair value gap with bodies. So now to me, it's just really up and stuck. I ain't gonna front. Like I think the Russell is gonna take these highs minimum, but like it should be going to these highs at the top. Very interested in running these highs at the top. So you see the price levels and stuff. TradingView lagging. I can't really like go to different time frames, but I'm looking towards all-time highs ultimately on Russell right there. CL, man, CL, lovely. We knew CL was coming down. Remember on the Watchlist class last week, I told y'all, I said if we lose this gap, if we come under this 73.42, the oil CL is going to drop off really hard. And I think we all watched it drop off pretty hard. Then it consolidated. I don't think we've met our objective yet, so I think it's going to continue to drop. And so outside of this consolidation, like basically, I would think that if we push up first, we're going to short it. If we just break down with a fair value gap, I would entertain that fair value gap for continuation. So remember, I don't like to trade on the inside of consolidation, but I would anticipate either a AMD or simply a continuation with fair value gaps in the mix, basing my trade on how we use that fair value gap. Stuff I went over in the demonstration. So make sure you pay attention to those demonstrations. It can help you when I talk about the watch list. All right, so CL, I am bearish on it. It do look crazy on the higher time frame. I agree. The thing I don't like about CL is the monthly. I don't like the consolidation of the monthly. I don't like the wickets leaving as well. This monthly candle closes after tomorrow though, so that's the thing to keep in mind. But I don't like the wickets leaving, and so a bull case is trading into that wick a little bit before anything else. So I want you to keep that in mind. We could trade into that wick some more because a lot of times the market don't really leave these type of elongated wicks in without addressing it a little bit. So we might trade into it. So that's a small bull case for you there on CL. But overall, I think it should at least come to 62.80. I think it should at least go to 62.80. And we'll see how bearish this thing want to get. But like to me, the bulk of the move was really this. If you ain't catch this, I feel like you might be chasing a little bit. Especially because to me, I like when trades look clean on all time frames, especially from the monthly. So when I go to the monthly on this ticker, this isn't clean. I think we could all see that we going sideways. So that's not really something I'm interested in. That's why I'm kind of like, it is what it is. Gold. Let's talk gold right quick. So gold doing what we said it would do. Gold, I told y'all last week, I'm bearish on gold. Come on, man. It's about to load in a second. All right. So I told y'all I'm bearish on gold. You see how we had the rejection here? I think B adjust is off. B adjust is off. My fault. B adjust is off for me on gold. B adjust is off on gold. So I had liked this sweep. The drop off, I told you guys it's going to be choppy in here, but I think we're bearish. So remember last week I said it should be choppy in the middle, but I do think it's going to be bearish ultimately. Once we lost these lows, I then put this arrow out in the community. I said I think gold is going to this target next. That's 3,205.3. And I still have that analysis. Okay, I still think it's going there. Nothing has changed my mind. I figure we might have a little bit of turbulence inside of this bullish fair value up right here. But ultimately, I don't think it's going to work. I think we will eventually trade past it and head to 3,205.3 and then potentially lower, but just on some safe target type vibes. That'll be where it could go. I'll just show you the hourly right quick. So looking on the hourly, it's really not the cleanest movement. I'm not really a fan of it, but I told you this is we're inside of that fair value yet, right? That's why I said there should be some turbulence in here. So I'm not really a fan of this. Maybe even if we lose the lows from tonight, it'll probably get nice to the downside. I think in this general region, it could be like choppy. But if we lose the lows that we put in at 6 o'clock, we might make that move to that target below. Just something to keep in mind. We're gonna see this handful on gold. And is that the last thing? Okay, yes, just QQQ and SPY. Thank God. Oh my gosh. All right, QQQ and SPY. We ended up using the pre-raise we was looking at. I know the mentees we looked at this. I didn't talk about this in the free community, but this hourly BISI VI ended up working out. Things are good. For me right now, I would want to see price respect this red candle. It's the daily chart too. This red candle, my bad, on the daily chart for right now until I get a new PD array. Right now, the only PD array I'm watching will be this red candle to keep us bullish. And if we trade backwards first, of course, and on SPY, which also ran all-time highs. So target hit, by the way, because we've been calling for all-time highs on options. For SPY, I'll be watching this fair value gap right here that's connected to this VI. I'll watch this region just like this. If price does trade backwards first, I want to see the support price to go even higher. All right, that's if we trade backwards first. If we gap up tomorrow, if we just keep going, then I would have a different analysis. I can only give you a plan based on what I see, and it's going to be based on retracements. Of course, I remain bullish on this ticker. I remain bullish on the Nasdaq, the S&P, the Russell, the Dow. You feel me? I'm bullish on all those tickers. I'm short-term bearish on gold until I see how we take the lows on gold. And CL, not really a fan of it. I'm a little more bearish right now, but I'm kind of good on that. And y'all already heard my forex analysis: bearish on the dollar, bullish on dollar pairs. And that's really it. And I'll update y'all in the chat, going forward. So if you're watching this on YouTube, definitely like the video, subscribe to the channel, and click the links in the description. There's a lot in there. We got a whole mentorship that will 100% change your life. We live trade at least 3 days a week. Check the link out, and there's a free community. My Instagram, everything's happening on me. contact me. We got free one-on-ones. That link is in there too. If you want to get a free one-on-one, holla at me. And with that being said, man, that is all. Hold up, actually, keep God first in your life. That's the most important thing I said all class. And with that being said, that is all she wrote.